A very good morning. I like how the 1st and the 15s are aligned on Mondays the last couple of months. Seems very organized, right? Anyway, welcome to today's episode of Morning Wealth. We'll talk about three things. Rising tide can lift all boats, interest rate volatility, what the pros are saying, and the week ahead. Last week felt at times like a tug of war between two investor camps. One, those who believed a reflation trade is driving a rotation into cyclical stocks at the expense of technology as rates rise, and those who believe all kinds of stocks can go on rising together. On the surface, rates snapped higher with the yield on the 10-year treasury jumping to about 1.62. The Dow Jones gained 0.9 while the Nasdaq declined 0.6. Among the biggest gainers within the S&P 500 were major industrial stocks like Boeing and General Motors, which were up about 6.8 and 5.2% respectively. Financials also gained. The bank index was up about 1.7%. Yet when you look at the whole week, one might have to conclude that a rising tide can indeed lift all boats. The 10-year yield on the treasuries moved from 1.55 to 1.62 last week. Over the same 5 sessions, the S&P 500 gained about 2.6%, but the tech-heavy Nasdaq did better, rising about 3.1%. Meanwhile, on the economic data front, data showed that consumers are growing more optimistic as well. Consumer sentiment in the US increased in early March as more Americans have been vaccinated and job and income prospects have brightened. The preliminary estimate of the Index of Consumer Sentiment compiled by the University of Michigan jumped to the highest since March 2020 and beat expectations. On the interest rate volatility front, the pros aren't sweating interest rate volatility. In an informal Bloomberg news survey of more than 50 market players, which include some of the world's biggest fund managers, say equities can persevere and continue rallying through the rise in government bond yields. They are focusing instead on prospects of a powerful economic and profit recovery. As long as central banks stick to accommodative policies, the equity bull run can power ahead is what these investors are saying. And that we will come to know when the Fed meets. In terms of the week ahead, it's a big week for central banks. The Fed's move along nothing to see stance is being solely tested by soaring yields and rising inflation expectations. If Jerome Powell doesn't do enough on Wednesday to explain where the Fed stands, there may be another tantrum. Any suggestions regarding FOMC discussing switching bond purchases towards longer dated debt may also cause another storm. All this is according to Bloomberg. Updated economic forecasts and the latest dot plot will also be revealed. The Bank of England may stand pat on Wednesday as it focuses on growth risks and bond buying flexibility. BOJ is also going to meet after a month-long review of its framework. The expectation is the Bank of Japan to make adjustments at the margins that would allow more flexibility in its management of the benchmark government bond yield and asset purchases. Retail investing and short selling will be the focus of a House committee hearing midweek. Quadruple witching when market index futures and options, stock options and futures expire happens Friday. That usually results in increased volatility. US-China plan their first high-level in-person meeting of the Biden era. Secretary of State Anthony Blinken and National Security Advisor Jake Sullivan and their Chinese counterparts are set to meet Thursday through Friday in Alaska, seeking to lay out their priorities and cover a range of divisive issues after months of deteriorating ties. In terms of economic data, US retail sales may have fallen last month after stimulus checks helped drive a 5.3% surge in January. Industrial production, housing starts and weekly jobless claims are also on tap. In terms of auctions, I think there has been a keen eye on auctions and the issuances that are happening from the Treasury. The US sells 20-year bonds on Tuesday and a 10-year tip, which is your Treasury inflation-protected securities, on Thursday. On the US corporate credit front, high-grade issuances may reach as much as $40 billion after $53.5 billion was raised last week. Junk is about $9 billion short of becoming the second busiest March on record. In leveraged loans, there are at least 16 deals with commitments due. Lastly, we are at the fag end of the earnings season. Nike would be reporting. FedEx will also be something that we'll be watching out for. BMW and Volkswagen are also reporting. On the tech side, we're looking out for Accenture. And on China, we'll be looking out, China, Hong Kong, we'll be looking out for CK Hutchinson and Pinduoduo. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.